Welcome to the blockchain. Things are about to change. Open up the gates. Systems get replaced. Bitcoin, decentralize the trust. Security, transparency. The network's run by us. Bitcoin.
Hello and welcome to the Bitcoin.com podcast. We have Gavin Knight and Simon Dixon here with us today. I'm your host, Zach Doty. Simon is the co-founder of BnkToTheFuture.com. He's a fund manager at Bitcoin Capital, and he's the author of Bank to the Future and a fintech angel investor. Welcome to the show, Simon.
Hey, thanks for having me. Delighted to be here. I've been watching Bitcoin.com go from strength to strength, so happy to support it with some content.
Thank you. Thanks for joining us. So tell us about Bank to the Future and what you guys are doing there.
So Bank to the Future is an online investment platform. We've hosted, funding rounds for many of the major Bitcoin companies you might have heard of. It was a 3 to 4 year regulatory exercise, and then we launched it last year in April 2015, and we went from 0 to 60 million invested in rounds through the platform in about a year or so. So we're really happy with where it's going. But it's an online investment platform for professional investors to invest in some of the funding rounds that you might often read about on Bitcoin.com or other outlets. And it's an opportunity for qualifying investors to co-invest on the same terms as some of the deals that are being done by the VCs.
Great. And I know you're excited about new models for investing and for crowdfunding. So tell us about Bitcoin Capital. What are you guys doing there?
Bitcoin Capital is a fund that Max Kaiser, who's a journalist on RT, who is actually responsible for many of the early spikes in Bitcoin prices, I'd say, with his coverage and the first coverage of Bitcoin on a national TV show. We for quite a few years we were toying with the idea because we spoke together at the world's first Bitcoin conference in Prague, and that's where we first met. And we were toying with the idea of putting together a fund to invest because at the time, at the Bitcoin conference, there was a startup pitching called BitPay who had Tony Gallippi pitching his concept of accepting payments using Bitcoin. And we invested in that round, in the seed round. And we wanted to put together a fund so that we could kind of, we knew we both shared a common belief that the financial system was going to have significant change. And we also both believed that Bitcoin was an extremely disruptive technology. But we didn't know which companies were going to succeed. So we wanted the ability to have a really diversified portfolio and invest in the most promising areas, but make sure we've got a really diversified across the sector. So we set up Bitcoin Capital to invest, and we actually raised all the funding from Bitcoin Capital online by the investors on our on BnkToTheFuture.com. How
much was Bitcoin selling for when you got involved?
I remember the crash from $20 to $3. The way that I got into Bitcoin, actually, so I used to work, I was an investment banker. I did a couple of years on the trading floor, a year in corporate finance, a year in stockbroking after university. And I left in 2006 to work on a book that I wrote called Bank to the Future. And when I wrote Bank to the Future, it was pre-Bitcoin, it was pre-fintech, it was pre-financial crisis when I did the first draft. There's been a couple more versions since. And in the book, I identified 3 problems with banking. So I came from very much an economics and banking reformers perspective. And when the financial crisis happened, that gave a lot more credibility to my message. And then I was contacted by some people in the early Bitcoin community, and they asked me to come along to the conference. So I started doing some research on the subject, found it really interesting, and then spoke at the conference and met some of the developers. And at that time, it was mainly activists there, and been hooked and involved ever since, and investing in the sector and diversifying as wide as I can with the belief that this is going to have a major impact in the future of finance.
I think we share that belief. And so as somebody who's been involved in the banking sector, in the commercial trading, You've watched the crash in 2008. Where do you think the markets are going from here? Do you think we're going to see another Great Depression or another major crash in the near future?
Absolutely. We haven't seen the worst of it yet, because we haven't solved any of the problems that caused the crisis. So to give you a little background in the book, I'll give you the overview here in three little points. I talked about three problems in banking that until they're solved, we will get greater and greater crashes every time the leverage is kicked down the can of the road a little bit further. The first is that with banking, when you deposit your money at a bank, the bank becomes the legal owner of your money. And one of the reasons that I got very involved and interested in Bitcoin is because you own your own Bitcoins. And that was one of the first most appealing parts of it. With fiat money, you don't own the money, the bank owns it. And that manifested in the forms of bail-ins and bailouts and all sorts of stuff. The second is that when you deposit your money with a bank and they become the legal owner of it, they spend it as they wish. And where they allocate money actually dictates the future of the economy. And so if you take the money supply that's created by banks, which is approximately 97% of all money, about 40% of it goes into increasing property prices by issuing mortgages and trying to find more and more people that can take on mortgages. The other 40% goes to financial speculation, and only a tiny percent of it, about approximately 7%, goes to small to medium-sized businesses that create jobs, and the rest is consumer loans. So the banks are allocating our money in a very unsustainable way because it makes sense for the bank's business model, and the government have outsourced the ability to create money to banks. The final thing is that the third point is the monetary policy, that all money is backed by debt, and therefore, in order to have an economy, you have to have more debt. So if you look at the different forms of money, any money that you see in your online banking is actually corresponding to somebody else's negative balance. That means that in order for the money to exist, somebody else has to borrow it. And the banks actually created and invented digital money when the government gave them the ability to create deposits every time they issue a loan. And so what that means is that all money is backed by debt. And so the monetary policy is about trying to control how much debt is created by the private banking sector, which is the only result that can come from that is you get more consumer debt, more corporate debt, more government debt. And when those are all over leveraged, you end up with more quantitative easing and other schemes in order to kick the can down the road a little bit further. But until you solve those three problems, you will always have a greater financial crisis. And we're now reached a historical place where we've tried bail-ins, we've tried bailouts. The appetite for those are going to be a lot smaller. We're moving towards negative interest rates. And now we have a completely insolvent banking system, a completely insolvent governments all around the world. And so it's the end of what I believe to be a Ponzi scheme. When exactly that will happen just depends upon how many products and financial engineering the government does each time you have a financial crisis. Thankfully, the alternative came along, which is Bitcoin, where you own your own money, you spend it as you wish, peer-to-peer, and the monetary policy is based upon equity rather than debt. So you have a completely different dynamics where people don't need to go into debt in order to have a money supply. So those are the grand economic things. When that will happen, it looks like 2016, where we are now, started off with a catalyst where we need massive corrections in property market, we need massive corrections in bond markets, and we need massive corrections in stock market, because we're at the end of the cycle where financial engineering was used to prop up all those markets, but they didn't solve any of the problems that caused the problem.
Yeah, and those are the reasons why so many of us are so passionate about Bitcoin, because it is an equitable form of money. It's an equity-based asset. It's an asset that we can own and take possession of. We just had Joshua from Voltoro on the show, and he's bringing in the gold bug audience into the Bitcoin community. And I think a lot of us were into precious metals before we found Bitcoin, which is really a digital form of gold. And so looking at the reserve balances with the Federal Reserve banks, I was just noticing that they're currently at $2.3 trillion, and I think that is 400 times higher than it ever was prior to 2008.
And that's a drop in the pond compared to the size of the derivatives market as well.
Exactly. So with Bank to the Future, what are the most exciting companies that you have featured there or raised capital for?
So, and then how this ties into Bank to the Future. So Bank to the Future is, a company that I co-founded with Dixon, who's my wife, and we co-founded it together. And really, we wanted to create a place where those looking to hedge, you don't need to believe a lot of the things we just said. You can take your opinion on it, but we wanted to create a place where people can invest and hedge in and run a really diversified portfolio in the alternatives that are being built. And so since the financial crisis, we've had a wave of fintech innovation that one step at a time is chunking away at every single financial product. And so our goal at Bank to the Future was to provide investment opportunities that allow people to invest in companies that are chunking away at finance, one financial product at a time. Some of my favorite companies, and the reason we created it really is because, as I said, we wanted to invest. We didn't know which companies were going to succeed, so we wanted to give the opportunity for people to invest in everything in the sector, really. I'm really interested. So my belief is that we're approximately 3 years away from plugging together all the really hard work that entrepreneurs and people have been investing in over the years. So, if you take, I think the most common reported figure, which changes quite frequently, is about $1 billion has been invested in Bitcoin and blockchain related companies. Well, we've done 60 million a year, so that's about 6% of the reported volume, and that's all from accredited, qualifying, high net worth investors. We accept Bitcoin, and a lot of wealth has been generated in Bitcoin, so there's many high net worth in the Bitcoin sector as well. But some of the opportunities. So we did Shapeshift is a really interesting company. I'm sure your users will be familiar with who Shapeshift is. I think Eric's done a couple of interviews here. We invested in Shapeshift and put together a syndicate where the platform could co-invest on the same terms as us. We did BitPay. The ones that really interested me the most actually are companies like BitPayzer and UnoCoin. So they're the largest exchanges in Africa and India. And these are areas where I think Bitcoin, it's got less resistance, where, in America, there's a lot of resistance because people are trying to compare it with what they've currently got. And, they may not necessarily know that they're involved in an incredible Ponzi scheme that's pretty dangerous. The crisis gave them the first demonstration, but many people ignored. But the other economies, they've got, Bitcoin can improve significant improvements to what they actually have. So I'm really passionate about these types of areas. One of the live deals on our platform right now is a company called Bitso. They're the largest Mexican exchange. And what they've got that's really interesting is a direct integration into the Mexican payment system. So rather than having to most exchanges, they have to go around and find banks to support them. But they've actually got a direct integration where they can issue the equivalent of Bitcoin bank accounts for their users, and they can clear fiat Bitcoin within seconds directly. So this, I think, is the first application where we can start to see the true potential of the promise that Bitcoin has given us in terms of remittances. Because at the moment, remittances and Bitcoin seem like the perfect application, but when you dig deep into it, transferring fiat to Bitcoin is a clunky, expensive process. So when you have direct integrations like this, you have the potential for it to live up to some of its promises. Now, when Bitso can plug into BitPayzer and UnoCoin, and then you can plug that through Shapeshift and allow people to transfer altcoins in and out, this is where it gets really interesting. And then you can build investment portfolios through Bank to the Future. You can hedge some of your currency risk through companies like Uphold, where you can peg your Bitcoins to US dollars. And so, here's where I get really excited, is when not all the individual applications, but when they all get plugged together, because they're all built upon this common language, as it were, of being built on top of Bitcoin, which is programmable money that can all be plugged together.
So as a former trader, what are your predictions for the future of Bitcoin and the next 5 to 10 years? Are you pretty bullish?
I'm disproportionately overexposed to the growth of the sector because I hold a common belief against all portfolio theories of being well diversified. and I've exited many of my traditional investments in order to gain overexposure to this sector. So I'm biased and I'm bullish on the future of Bitcoin. I'm also diversified in investments in other blockchains, even though I'm way less passionate about the impact that these blockchains can have because of the massive network effect and the superiority that Bitcoin's got in being the most superior and secure blockchain at the moment. So it's kind of one of my pet hates. Everyone talking about blockchains at the moment, when I want to steer people back into talking about Bitcoin, because while it may make a great investment opportunity to build a blockchain that banks can use to save costs, they'll still be saving costs in a system that's unsustainable, and the consumer won't get any benefit at the end of it, and it will just allow them to perform fraud cheaper. And so for me, that's less exciting than actually the Bitcoin blockchain, which can actually work independent of the traditional financial system. So where do I see things going in 5 to 10 years? It's a really hard one to call the exact timing. The reason being is because the government has shown a willingness to do anything to prop up the traditional financial system, but the traditional financial system is doing a really good job of overexposing taxpayers to really speculative financial products. And so Bitcoin will go through pockets of growth, I believe, every time there's a financial scandal and financial innovation. And so will that happen in the next 5 to 10 years? It certainly should. But what will the government do in order to prop it up and make the next financial crisis worse has proven that they'll do anything, but they're running out of tools. So, I'm very patient. I'm definitely willing to sit here for the next 20 years to see exactly where it goes, but I think it could be sooner. I think it could be a lot sooner.
Peer-to-peer lending is a big topic that you write about in your book. So tell us, what do you think the future is of peer-to-peer lending? Can digital currencies combined with peer-to-peer lending services replace the need for banks completely?
So peer-to-peer lending, two kind of topics there. So for those that don't know, peer-to-peer lending is disintermediation of banks, whereby rather than the bank issuing a loan and pooling together your money and your deposits and creating money every time they issue a loan, peer-to-peer lending is met with a deposit first. And that means that an investor has to deposit some money into a peer-to-peer lending platform. And then once those deposits are there, the peer-to-peer lending platform can issue a loan direct. And because there's no bank in the middle, you tend to be able to get some cost saving for the person borrowing the money, and also a higher return for the investor lending the money because they're not doing it through a bank deposit. The challenge with peer-to-peer lending is, firstly, it's a hugely disruptive, much more efficient, really interesting way of doing it. It relies on a couple of things. So the reason why it was invented in the UK and then America took it to the next stage and then copied it all around the world. But the reason that it worked well in UK and US is because they got good credit data. Whereas in China, they've had lots of scandals and lots of problems because they don't have good credit data. So there's kind of on the side a project that needs to be done, which is getting data, and identity and documentation globally to make peer-to-peer lending succeed, which is one of the promises of blockchain and what it might be able to achieve, which is it hasn't achieved yet, but it might be able to achieve. Then you can have global peer-to-peer lending once the data is there and people can own their own data and share it securely. The problem with traditional peer-to-peer lending is that if it succeeded and displaced bank loans, we would be met with a depression and a dire depression in our economy. The reason being is because with a peer-to-peer loan, no new money is created upon issuing the loan. It's just recycling banks' money. So if people started paying down their bank loans, you'd have a shrinkage of the money supply. And if people started borrowing through peer-to-peer lending platforms, you would have no increase in the money supply. So you'd have a big contraction in money, which would have to be plugged somewhere else. And so that's where digital currency comes in and where it becomes hugely interesting, is a digital currency is a new form of money creation, which is a new money supply, which is backed by miners verifying transactions. And so therefore, if you do peer-to-peer lending through a digital currency, whether that be a government-issued digital currency or a global currency like Bitcoin, then you don't have the same contraction in the money supply that would crash the economy. So there's two ways to go about this. One, if you want peer-to-peer lending to succeed with traditional money and displace banks, then you need governments to actually reform the way money is created to plug the money supply with a new money supply, if that makes sense. But with digital currencies, you can do it now in a sustainable way. The problem is you've got to figure out ways of reducing currency volatility and all those other things. And the fact that it's a small market at the moment with only about 8 billion of cryptocurrency liquidity at the moment. So there's kind of a few aspects there. You've got to reform the traditional financial system and change the way money's created, which requires governments doing that. If you want traditional peer-to-peer lending to displace banking, if you want crypto peer-to-peer to displace banking, then you need more adoption with people using cryptocurrencies. And the other missing pieces are global data that allows peer-to-peer lending to work on a global scale, which is certainly something that blockchain might promise to solve in the future. And the final thought really is many of the Bitcoin community, myself included, dismiss central bank created cryptocurrencies as just a worse form of Bitcoin, which I would agree with. It is a worse form of Bitcoin. It's a useless form of Bitcoin because it doesn't have many of the properties that Bitcoin has in terms of decentralization, global use, anonymity built in. But it is an extremely disruptive concept. So here in China, the People Bank of China has said they're launching their own cryptocurrency. What that means is that a central bank is issuing currency the way people think currency is created, which is the central bank issuing it, rather than relying upon a private bank to create the currency. So it's extremely disruptive if a central bank creates their own cryptocurrency because it's bypassing the traditional banking system, which means that you could actually get the reform that's needed in order to plug money supply gap that completely disrupts the private banking model. And that's why it's very interesting to have central bank created cryptocurrencies to compete with superior ones like Bitcoin, because then you can actually get everything we need to drive some sustainability in our economy.
So you talk a lot about how these institutions may fail and they'll come down. What do you think these institutions should be doing to update themselves and move forward? Obviously, there must be a lot of smart people there, but maybe they're making so much money already they don't feel they need to change.
There's nothing the financial institution can do because money creation within a private bank is the crux of their model. They're insolvent. If they stop doing it, they're bankrupt. So the traditional financial system cannot do anything but maximize the model as they have been in the past and rely upon a bailout when the risk gets too high, or go to a bail-in when the model's about to collapse. They have no other choice, the private banking system, to do that. The only thing that can be done is at the government level, where a government could restructure the way money is created, solve some of those three problems of banks being able to own your money, spend your money, and create money. And it has to happen simultaneously at a regulations level in order for all the finance houses to adjust at the same time. If one finance house adjusts or one bank adjusts, they will go bankrupt. So there's nothing that they can actually do. So it's nothing to do with how intelligent the people working for them are. They're doing what they need to do given the legal system and the legal environment they're working within. This is a systemic risk. But the one thing they can do is get involved with the alternative, which is what we're seeing with a lot of the traditional finance people that work in finance now joining Bitcoin and blockchain startups. I'd encourage them that Bitcoin and systems that work outside the existing system are the ones where you'd be most protected if, when the system goes where it should be going at some point, rather than some of the blockchain, which is allowing banks to commit fraud cheaper.
In your book, you refer to crowdfunding as one of the hugely disruptive technologies. Now, your platform is itself a crowdfunding platform for equity. Specifically related to equity crowdfunding, how do you see that evolving? It's been mostly restricted by the SEC and various securities regulation bodies in various countries. But blockchain offers the promise of a new form of security, a public ledger-based security. And Delaware just announced last week that they're going to be supporting distributed ledger shares. Whatever that looks like as they implement it, we won't know for a couple months. But what do you think the future holds for Bitcoin-based or blockchain-based equity crowdfunding?
So firstly, just to distinguish, we Bank to the Future is not an equity crowdfunding platform, because my definition of crowdfunding is that anybody can participate a small sum of money. At Bank to the Future, we have minimum investment amounts of $1,000, and we can only deal with a certain type of investor that's legally allowed to invest in this asset class of equity. Whereas crowdfunding, things like Kickstarter, where people can offer anyone contribute £1, contribute £10, contribute $10, whatever, then everyone can participate, and 1,000, 10,000 people can all contribute. That's a really good way of getting an early stage product or concept off the ground, but it only suits a certain type of person. Equity is what we do at Bank to the Future. Some of our products, we do funds, convertible notes, equity, different types of products, where we pull together and put together a syndicate of people that are legally allowed to invest in this asset class. Now, equity crowdfunding, where people can contribute £10, is enabled in certain jurisdictions, but is restricted by jurisdiction. So, in America with the Jobs Act, approximately 30% of a funding round could be retail investors if the company has registered with the SEC, and people can contribute £10 and invest alongside the accredited investors. So in America, it's slightly opening up. In the UK, they've got their own, they were the first to put legislation that allowed the £10 investor, but it sticks within their borders. And so what Bitcoin and digital currency came along and did is create a model that might work on a global scale. But here's the challenge. A security is a security is a security, and it's restricted. So if you open up equity and allow people to invest with Bitcoins, much like we do, then it's still a security, it's still equity. And it doesn't matter whether you're paying with Bitcoins or whether you're doing it illegally on a blockchain and whatever it is, but haven't got caught yet, it's still a security. And eventually people will realize that the reason that people are investing in these products is because they're investing. And the investment rules and regulations were put together because retail people, consumers complain when they got ripped off. And as soon as a lot of people lose money, they complain to regulators, and then regulators put in laws to make sure it doesn't happen again. And you end up with a cycle of large regulation, which would happen in the Bitcoin blockchain space. But the final innovation that's kind of coming through is a new asset class, which isn't a security, which is people offering digital tokens. And, people are having some success with that. So, we've got companies that have raised money through our platform, like Factom and Storage, where they created a two-tier structure where they offered a digital token and allowed anyone to invest in the digital token if they had Bitcoin. And then they also did an equity round on Bank to the Future where they allowed qualifying investors to invest in the equity side. And that's two different asset classes. One is less liquid, but you get the equity in the company. The other is more liquid because there's a short-term market to trade on, but you're restricted to the people that have Bitcoins in that community. Now Ethereum has come along, and as we speak, we're in the midst of the DAO launch, which they're calling the Decentralized Autonomous Organization, which doesn't offer equity. And they're kind of trying to be disruptive to equity, and they may succeed in doing that. But equity offers a lot of investor protections. The DAO offers a different way of doing things, transparency that isn't offered with equity. And the tools could all be used together in conjunction to create new liquidity pools. So we're seeing this new asset class emerge. But here's one thing that's sure: if DAO asset classes and the regulators consider people to be investing in order to make returns, which I believe almost everyone is investing in order to make returns, then at some point they'll just increase the definition of what a security is, and then it will be subject to all the same regulations and who can invest as any other type of security.
Yeah, it'll be exciting to see what comes out of Delaware's initiative.
Well, yeah. So the reason I'm not too excited about what's happening in Delaware is because it's kind of like the banks using blockchain in order to make some cost savings of how they transfer assets around that will have no benefit to the end consumer. What my understanding, and I could be completely wrong because I haven't researched it far, but my understanding of what they're doing in Delaware is they're taking traditional equity, which has the same legal rules and everything, and they're going to be doing some kind of public register on a blockchain that saves them some money in administering how they register people for the equity. So it will have zero impact in terms of, in that sense, it's just blockchain and a new thing that can help people to get a bit more transparency in the share registration process and save them some money.
We just saw Mycelium do a crowdfund of some kind where they raised 1,200, is it 1,300 Bitcoins now?
Yes, they've raised 1,300 now, have they?
I think so.
I was just going to ask, you talked a little bit about advancements in Ethereum. What do you think about the advancements in Bitcoin? Things like what sidechain technology will allow and some of the other proposals. Do you think that'll shape the way people invest in the future? Do you see a crowdfunding sidechain or something like this? And are you sort of forward focused on that, or are you still looking at the traditional sort of Uno coin, BitPay, like who can actually facilitate the needs, basic needs of on ramps and off ramps?
So with the with coin offerings and ICOs and all these tokens, as I said, they're restricted to people that have Bitcoins and people who are in that sector. If you look at the statistics on our site, we've got probably one of the greatest percentage of people using Bitcoin and investing with Bitcoin of any business that accepts both fiat and Bitcoin. And so, we've had 60 million and we've had about 12,600 Bitcoins invested at this time. You could look at that as about 20% Bitcoin penetration or whatever the exact stats are at the current price. But 80% are still using fiat. So allowing people to invest with fiat is still what 80% of investors in, and we're niche to fintech and financial innovation. So that's a more sophisticated fintech audience. If you took it to another platform, I'm sure it would be less than 1% or so. So it's about reaching different audiences. Now, in terms of where that will go in the future, I'm sure as Bitcoin adoption goes, I'd love to just stay within the Bitcoin ecosystem. But we're talking about disruption of two things here. So we're talking about the disruption of fiat with Bitcoin, and we're talking about the disruption of equity through some kind of decentralized autonomous organization. Those are two separate things. And so whether you can, do crowdfunding fully on a blockchain relies upon the disruption of equity, which means you've got to get every business in the world to rethink how they structure their companies, and also the disruption of consumers and how they hold their money, which is getting everyone to hold money in a cryptocurrency rather than a fiat currency. So those are two very hard tasks to achieve. Whether they will happen simultaneously with the invention of a sidechain is a big ask. So there's a transition process, and I'm not sure that a DAO addresses many of the legal protections that are needed that equity can offer at the moment. But I'm open to, Bank to the Future is all about investing in the future of finance. And if it turns out that autonomous organizations are the future, then we will gradually transition our model accordingly until there's no demand for traditional equity and traditional investment products. And it's also worth pointing out we launched products, investment products, where we're all about allowing people to invest in this sector in a way where they're used to without having this huge learning curve. So, for example, we launched funds that pay dividends every day in Bitcoin or Ether, and then once they start accumulating Bitcoin and Ether, our investors they then start to ask, how do I secure them? How do I store them? And then they start playing in the sector. So we're all about new adoption into this area. Sidechains is very important. What effect that's going to have in Ethereum, but the jury is out. To investors, I say stay diversified, and I'm diversified across. I've got Ethers, I've got DAOs, I've got Bitcoins, and I'm investing in companies that are doing stuff on all of those. You
mentioned to me before the call that you'll be traveling around Asia. I assume you've been all around the world. Do you notice a different response from different parts of the world, and engaging investors is different? And what's kind of like the technological knowledge in these areas, like say Thailand or I know you're in Hong Kong now. Do you find it harder to explain as if you were in maybe the United States?
So yeah, I mean, my favorite type of presentation is actually, I much prefer speaking at new people that have heard of Bitcoin, heard of some of these concepts, but haven't dabbled yet or haven't engaged, and they're looking to. I'm all about new adoption. I much prefer that than going to a conference where everyone's debating block sizes and that type of stuff. They're both really important. But I feel my value is in bringing new people into the sector and realizing and helping people realize some of the they can gain just by dabbling their toe in this sector. And yeah, as part of that, I do speak around the world, everywhere. I think you tend to see the same objections, the same paradigm shifts, the same realization wherever you go. And sometimes one of the biggest challenges is forgetting that actually most people know nothing about this area, and you've really got to start from the beginning. And so, while we can get caught up in our own world of how Bitcoin's changing the world and how fintech is changing the world, it's still very, very new to a lot of people. And, different places have different levels of adoption. I think Asia is where I focus a lot of my time because I think it has the greatest potential to have the largest impact with the least level of resistance compared to America, where everyone's not everyone, but a lot of people that in general are happy with the way they do things, and they're going to wait for a disaster or crisis till they react. Whereas I think in Asia, in general, I hate to be stereotypical because across Asia, every culture is so different. In the next few weeks, I'm doing Thailand, Hong Kong, Indonesia, Vietnam, just come back from different areas. Even in China, you go to North China, South China, completely different. So it's very hard to make these broad generalizations. But if I could make such a shameless broad generalization, I'd say in Asia, they're more open to the possibility that the future looks very different from the past to other countries where I might speak in. And I hate the subject of jurisdiction because I really do live my life and run my business in a borderless world. We're compartmentalized into different jurisdictions, and we have, to run BnkToTheFuture, we have different companies all around the world performing different activities, mainly based upon, which legal structure is right for which part. But we have staff everywhere. Our office is Slack and Skype, and its jurisdiction is really not important, other than we're being forced by governments that it should be important. But we live in the cloud, and I'm very much, my ideology is that I love to travel to different places, meet different cultures, and you tend to see many of the same realizations when you present on these topics at many different places.
And we hear a lot about volatility, like the more volatile the currency, the easier it is to sell something like Bitcoin. Do you notice that when you go some places, the question comes up, hey, our currency is really volatile. Can I use this Bitcoin thing to save myself?
We haven't seen, so much of that. So, volatility is mainly a problem when you're doing international transactions. A lot of these countries, like if you go in Vietnam, there's only 30%, bank penetration. So you've got 70% of people using cash. And that cash, when they go and buy some fruit next door, is not volatile. If you're trying to send and do remittances back home, so it's different user cases, then there is volatility. But those are people that might be plugged into to different systems. So the challenge with answering such a question is that Bitcoin has so many different user cases which are coming out, and each of them needs a different version of what Bitcoin does, whether you need to take out volatility or not. In order to solve that certain problem. So really, to give you a good answer to that, it needs to be on a case by case of what particular area of finance we're trying to do better. But at the moment, Bitcoin doesn't quite solve what we know it can solve in 3 years. And that's when all the APIs get plugged together and the different blockchains and user cases all get plugged together, which is the most exciting time to be alive in financial history. And when the final thought I'd like to leave people with is, when these traditional systems collapse, a lot of people are going to get hurt. A lot of wealth is going to be destroyed. And I'm just so grateful that we live in a day and age today where actually there is a hedge, there is an alternative, and the people that are going to get hurt in the future can actually start protecting themselves. Or if they leave it till the bail-ins or the bailouts or the particular area of finance that hurts them the most, there is an alternative out there, and we have global borderless ways of transferring value all around the world, as long as you've got an internet connection.
Absolutely, yes. Millions of people have lost their retirement accounts, even their bank accounts through bail-ins and bailouts, and now there is an asset that can protect your wealth. And so check out Bank to the Future. Look up the book on Amazon. Google Simon Dixon. And thanks so much for joining us, Simon. It's been a pleasure talking to you.
Yeah, sure. And you guys keep up the good work, because one of the most important things in this sector is education, content, and exposing people to different schools of thoughts. And you're doing a great job of that at Bitcoin.com. Thank you.
Thanks for joining us. Again, this is the Bitcoin.com podcast. Go to Bitcoin.com/podcast. Thanks.
Blockchain.